the markets are down, crypto is getting hammered. Right? Bitcoin has reached sub 16,000 levels. It has touched sub 16,000 levels, and this might be a good time when a lot of people think that, hey, I should load up on some good tokens. And one of the tokens that or one of the cryptos will always come to your mind is probably Polygon, right? So here's an analysis. We'll break down Polygon to see what's great, what's good, what are the risks involved, and what should you really be doing. Right? We'll see if Polygon is a great investment for you or not. Now, to begin with, what is great? Right? What is great is that Polygon is solving a real problem. Right? So Ethereum had its share of problems, the blockchain dilemma to be very specific, and Polygon has been doing a phenomenal job trying to solve that. Right? In fact, they don't have a single scaling solution. They have something like a Swiss Army knife kind of a scaling solutions. If you go down to their website, you'll see that the number of scaling solutions they have right across the board, right from optimistic rollups to zero knowledge rollups and whatnot, they are getting their hands dirty in everything possible. Right? They are putting in a lot of resources into all of this, and they are covering their bases. Right? If you look at these quadrants here, right? Let me just reduce this here so you can see the quadrants. They are covering almost all of it. You have rollups like Optimism, Arbitrum, etc., which are probably operating in just one of these quadrants, but Polygon is operating in almost all of them, and they are doing an intense knowledge sharing between their teams to ensure that everybody knows what's going on. Right? This is something that is like absolutely fascinating for me on how they're doing it, and you can see the results. There are 37,000 apps and growing. Right? The ecosystem is growing. There are more than 37,000 apps across gaming, NFTs, DEXs, and whatnot. Right? In fact, if you look at the ecosystem growth, you'll see that the wallets have been increasing, NFT transfers have been increasing. Of course, Q3 or Q4 numbers would be one of the highest, but of 2021, I mean. But even this year, despite the market being down, they have had steady increase in numbers, and that is something that really impresses me. In addition to that, it is not just that somebody is creating a dApp; they are also doing transactions on it. Successful transactions have also been happening at a pretty good rate. It is not down like 90% or something. Price might be down 90%, but transaction wise, compared to the peak at about close to 500,000, they're still doing 239,000. So maybe down like 50%, which is still not as bad as the price being down. So in that sense, Polygon is doing some phenomenal work, and there is limited dilution risk. Right? If you look at the supply schedule, Polygon has a capped supply. It is fixed, and it is almost, I think, 88% in circulation right now. 88% of all of Matic tokens are in circulation, and the rest 12% will be out in the next few years. But broadly, for you as an investor, the dilution risk is very low. So that is something that you should be happy about. Now, what's good about Polygon? The first thing is whales are holding Matic. Right? I've been noticing a pattern. Right, I look at whale stats almost on a weekly basis, and a few weeks ago, whale stats had was indicating that a lot of whales were holding the FTX token, right, FTT, and I was surprised that after a few weeks they stopped holding it. Right, you don't see FTX anymore, and this is a pattern that I saw, that whenever whales stop holding something, right, you know that, hey, if they are selling this, like something wrong with that, and we saw what happened to FTX, but they are holding Matic. Right, in fact, they're holding Matic to about 1.6% or 1.16% of their portfolio, which is pretty good. Right? So if whales are holding it, that means it is good. If whales decide to sell, then you might want to sell as well. Growth of Greek gaming users. Right? If you take Android or iOS, right, about $133 billion of revenue a year. Out of that, 67% comes just from games. Right? Games are very important, and even on Polygon, even on any Web3 platform, games will drive user adoption. If you look at the top contract that is using the Polygon blockchain, Benji Bananas, which is a game. The second highest is also a game. The fourth highest is also a game. So you see that there is a huge number of games which are deployed and are actively using it, and they have something like 500,000 users in 30 days. That's pretty good, right? So that is something that I'm very happy with. Enterprise partnerships. Polygon has done some phenomenal partnerships with the likes of Mercedes-Benz, Disney, Robinhood, etc. In fact, very recently they had a partnership with Instagram. The NFT collectibles that are shown as on Instagram, that will be through through Polygon. So that's another green flag. Dev activity is continuously increasing, right? So the markets can go up and down, that does not matter, but is development happening? This is the leading indicator for price. Development activity has been consistently increasing. The number of developers getting into this has also been consistently increasing. So this is a very good sign. Now, what are the risks? It can't be all hunky-dory, right? The first risk is that they are very low on decentralization. So we saw in one of our early analysis how the Nakamoto coefficient for Polygon is one of the lowest. In fact, if you look at it, it's like 1, 2, I think it's about 4 or something right now in Q3. Extremely low. The number of active validators 100, and that's because they have capped it at 100. They have some proposal to increase it to 105, but they have capped it over there to ensure that confirmation times are in less than 2 seconds. But that's a trade-off that they're doing, right? If this does not increase, decentralization is going to be very low, and that's some serious risk, especially given what's happening to all the cryptos. I'm very scared of something like this. The revenue is very concerning. Average cost of a transaction is about $0.09. Right? Revenue last quarter was $4.19 million at about 250,000 transactions. Right? Solana with 1/10 of this cost had something like 2.4 million in revenue. I think these guys can go up to 40 million, but overall I don't think it's still a great sign, because to get some significant revenue, right, you're at 4 million now. For you to reach, let's say, $1 billion in revenue, it is going to take 100 times more in terms of transactions. You have to reach 100 billion in transactions for you to do that. So that is somewhere where I see some concerns, because as the project matures, these are the metrics that people start tracking very closely to see the viability of the project, to see whether price makes sense, and so on. And that is something that I'm warning you very early, that it does not make sense at this point of time. The next risk is that their treasury is down 48%. Right? They have a Swiss knife worth of solutions, but to do that, they burnt a lot of money acquiring other projects and so on. And from a $4.6 billion Matic treasury, they're down to about 2.4 billion. About 50% of it is consumed, and there's a long way to go. So they've exhausted that in a very short time. Unless the fruits bear, unless whatever they acquired bear fruit, it's not going to look very good in the near future. Concentration risk in the total value locked. Right? Just 10 protocols, although they might have 37,000 dApps, only 10 of them account for almost 70% of the TVL, and that is a bit concerning, right? This is an insane amount of concentration in less than 0.1% of the dApps. So that is a bit concerning, right? In all my analysis, or even in my previous videos, I had always looked at a few things and I had flagged them as the risks. And recently, after the FTX fiasco, the CEO of Binance, he had put out a checklist and said, hey, look at these things before you invest in them, and avoid them if they are involved in any of these. And this is in fact pretty much the checklist that I have used in most of my analysis to flag things. And given that he is already there, I just took a screenshot of his tweet and I'm just checking it for Polygon. If you think about it, is Polygon not profitable? Yeah, of course, maybe today they're not profitable, but they're on track to it, because they know there is a proper business model, there's a proper revenue model, they know how to charge users. So this wise we're fine. Survive by selling their own tokens, right? We saw that with XRP, right? I did an analysis and we saw that XRP, most of its revenue is just by selling its tokens, right? And I had flagged it that time itself and said, no, it's bad. Give high incentives for locking your own tokens. We see this with a lot of projects like Drip and some of these which were a heavy scam, right? And especially like yield nodes and so on, where they incentivize you to reinvest whatever you have, right? That's bad. That's more like that's almost a Ponzi scheme. And we saw what happened to yield nodes. have a large total supply but only a small circulation supply, right? This I keep flagging, right? Wherever there's a large total supply but a small circulation supply, it means that there will be dilution risk, and I keep flagging this. We saw that with Gala Games very recently in a video that I made last week, and the last one involves loans. So Polygon is good on all this, right? So Polygon, if you go by the checklist that the Binance US put out, is not so risky in terms of all that. So what should you do? First one is, please do your own research, right? There is all these links that I've just shown you. Go through it, do your own research, and ensure that you know what you're getting into. Stake, because the market is going to be down for a while. Polygon gives you about 6% or so. So do stake, earn some money out of it. Create your own portfolio. I think investing in just one crypto is not a good idea. Polygon, especially if you go in a particular theme of, let's say, L1s, L2s, and so on, invest in a basket of them. Bet on many of them, because then we know that some of them will succeed, some of them will fail. So as a whole, your portfolio will grow, right? So do that. Right now, Polygon is about $1.15, down by about 60%, right? This is not bad at all, right? Compared to several coins we saw, which is down by like 95% and so on. Most are in the range of 80 to 95%, but Polygon's at 60% down. That means it's very resilient. It's doing extremely well. So that's a good flag. Create your own portfolio. And lastly, if you liked this analysis, subscribe to the channel, like this video, and tell your friends about it. Welcome to the Wave Crypto Club, and stay tuned for more such amazing videos.